My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to save you some money. My job is not just to entertain, but to educate, teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. I hope the Fed is watching the right companies here. After a not-so-hot day where the Dow lost 116 points, the S&P declined 0.65%, and the Nasdaq shed 0.46%. Sell. We need Fed Chief Jay Powell to listen to last night's big, bad conference call from CSX. That's a huge railroad. Or this morning's suboptimal report from aerospace conglomerate Textron that showed weakness in almost always robust aerospace sector. Or tonight's surprisingly not so hot guidance from United Rentals, the equipment rental company. At the same time, we need him to ignore the bank conference calls. Wow, like the excellent one we got today from Bank of America. And that was on the heels of the major bank stocks that have all been good.
House of pleasure.
And we certainly have to. We got to hope he stays away from any conference call, the red-hot airline sector. Why? Because we've got two economies in this country, people, and right now they're out of sync. There's the consumer economy, the one you interact with every day, and it's in fantastic shape. If you believe Bank of America, J.P. Morgan, and Citigroup, and why not? Consumers are right in the sweet spot. We're spending, but within our means, and we're taking down a little debt, paying it off. Based on what's happening in the consumer economy, you could easily make the case for more rate hikes here. Oh, but the business economy, that is a totally different story. That CSX conference call, I have to describe it as brutal, and that's why the stock lost 10% of its value. CSX is a railroad that moves all sorts of big industrial products. When their cargoes are suffering like this, it tells the Fed to slash interest rates like Freddy Krueger. We see this struggle between the thriving consumer economy and the ailing business economy plays out every day. It's a bizarre situation where the bulls focus on the negative data because they want a rate cut, and the bears focus on the positive data because they want the Fed to do nothing. I think the bulls will ultimately win. Why? Because Jay Powell keeps obsessing about that rate hike too far, that one in December, as well as President Trump's fickle stance on the trade war. I got to tell you, if the Chinese don't start buying some soybeans soon, I'm going to scream, but not as loud as Powell will scream if the White House rolls out another round of tariffs, something that CSX told us today could be very destructive for the economy. Mostly, though, this economy is just plain weird. I can't think of another time in my years in the business where the consumer was in such fantastic shape while the industrials were in so much trouble. Normally, the one boosts the other, or vice versa. Unfortunately, that doesn't seem to be happening right now. If you want to know just how crazy things are, and man, they are nutty, you got to listen to Jim Foote, level-headed CEO of CSX. He says, quote, "We started this year expecting revenue to be up approximately 1% to 2%. Both global and U.S. economic conditions have been unusual this year, to say the least, and have impacted volumes. You see it every week in carloads. The present economic backdrop is one of the most puzzling I have experienced in my career." End quote. He now thinks that the numbers are going to be down. With the stock down 10% today, it's safe to say that investors don't like to be puzzled. And who can blame them? According to CSX, markets that have been very strong are now doing very badly. Look at the intermodal. Think those big metal shipping containers, which is a great gauge of the broader economy. It was down a staggering 11%, although some of that had to do with internal changes to CSX. Foote went on to explain that the expected seasonal rebound that happens right about now has not materialized. Quote, "Many of our customers' volumes continue to show weakness," end quote. That's exactly what Jay Powell needs to hear if he's going to cut rates. Oh, boy, though, but then there's the brutal negative pin action. When one railroad does badly, the whole group gets hit. Union Pacific, it plunged nearly 6% today. Norfolk Southern went down 7%. You get all those cargoes like coal that are getting crushed. You got metals down basically because of overcapacity. Autos stuck in neutral despite the consumer's incredible balance sheet. CSX did have some real growth, primarily in grains for ethanol and sports utility vehicles, but it was more than offset by the weakness in intermodal. It didn't help that Textron, which is a mid-sized aerospace conglomerate, reported some very disappointing orders. Again, the pin action, ferocious. putting pressure on the entire aerospace cohort. It was a distinct overreaction that created, I think, some real bargains. Lockheed Martin, Honeywell. Between CSX and Textron, they touch on way too many sectors that are essential to the S&P 500. But as I always tell you, the money from one pocket finds its way into another. For example, Bank of America reported an amazingly good quarter that was greeted with buy interest, even in the heat of the sell programs that dominated at the end of the day. If there hadn't been sell programs, I think Bank of America could have up as much as $1. Abbott Labs reported an extraordinary number with accelerating revenue growth driven by relentless innovation. The new glucose monitoring system for diabetics is a huge hit. There are 80 million diabetics. Last night, United Airlines shot the lights out and dramatically raised its forecast. But more important than earnings, when there's a big cyclical shortfall, money pours into the turbocharged growth stocks, the ones that don't need a good economy to make the numbers. Will you look at Shopify? Here's a company that empowers small businesses, allowing them to make their websites look as good as a powerhouse's retailer. I know more people who've gotten their businesses going using Shopify than any other non-banking entity on earth. The companies that feel like they're being hurt by Amazon, many of them are Shopify, although Amazon is web services their best friend. For example, let me give you one close to home. My 25-year-old daughter, I don't want to reveal her business plan, but she wants to sell a particular kind of apparel. And last year I asked her how she'd get it up and running. She looked at me like I had two heads. The same way everyone else does, Dad, Shopify. I know that's purely anecdotal evidence, but remember, this is the same daughter who turned me on to Apple, Google, Etsy, PayPal, Align Technology, Adobe, and Netflix long before they blew up on Wall Street. What can I say? The kid is money. She stays in the picture. Of course, speaking of Netflix, we do have some companies that manage to buck the strong consumer trend. Netflix is consumer-focused, yet it's getting killed in after-hour trading because they're reporting appalling subscriber growth. Boy, are those guys terrible at predicting their own numbers. At the same time, IBM, which is all business, delivered what looked to be a better-than-expected quarter, but there always flies in that ointment, which I hope will change now that Red Hat deal is closed. That said, we still got the usual suspects that are still working like you'd expect them to when the economy's weak. Money goes into cybersecurity. This time it's Palo Alto Networks, CyberArk, Cramer family fave, Okta. It goes into cloud kings like Salesforce and Splunk and Adobe and ServiceNow and VMware. In the end, though, you have to wonder if there's enough here for everyone. We have JPAL satisfied by CSX and Textron, now URI, all of which gave them the green light to cut interest rates. We have a healthy consumer who's giving the banks some much-needed firepower. We have a healthcare star and a fantastic set of high-growth winners. It wasn't enough to prevent today's decline, certainly not. It might not tomorrow, given the fact of Netflix and URI, but we would have done a lot more without these positives. The bottom line, I think you need to hang in there and wait for some positive earnings reports, which I believe could be right around the corner. But if I'm wrong and the earnings are a bust, then the Federal Reserve has even more ammunition to justify multiple rate hikes. Either way, despite some hiccups, I'm betting with the Bulls. I think they're more likely to win. I need to start the calling with Billy from Maryland. Billy.
Jim, I first want to say thank you to you and your team for all of your hard work.
My staff is unbelievable. Unbelievable. And Regina and her gang are just amazing. What's up?
Okay, I'm calling about a retail stock. The stock is At Home. The ticker symbol is HOME. The company has just celebrated opening their 200th store with plans of opening 400 more. There's even been some rumors about them being acquired by a larger chain like Kohl's. The problem is the stock's dropped over 70% in the last 30 days. So is this a buy, sell, or hold?
They can open 1,000 stores. When they keep missing quarters like that, you're just going to have to go down. And believe me, Kohl's has its own troubles, and I don't think they're about to buy anyone. They should be buying back their own stock if they want to buy something. Let's go to Bruce in New York, please. Bruce.
It's Bruce from Audsley. How you doing there, Jim?
I'm doing well, Bruce. How are you?
Oh, so far perfect.
There you go. Look at that.
I wanted to thank you for making me a smarter investor.
That's what I'm trying. That's what I'm trying to do. Make people a better client. Make people a better investor. Thank you for noticing. Let's go to work.
Okay, about 20 years ago, my wise father-in-law, Julian, told me to buy Church and Dwight, symbol CHD. My average cost is about $2 a share. All dividends were reinvested. The stock's near its all-time high, with the market at all-time highs. Even though I'm playing with house money at this point, do you think I should sell some or all before
I have
earnings?
to tell you, I can opine about the company. It is so good. It has just done so well. It is so consistent. I don't feel any need, you've probably taken your cost basis out, to really do any selling. It is just a great American company. Boy, do I wish they'd come on. It would mean a lot to me. Thank you for this kind words. Can I go to Robert in Pennsylvania, please? Robert.
Hi, Jim.
Robert.
I'm calling about Harley Davidson. I've owned the stock now for about 10 years and bought it at $50. It's now trading around $36.
Right.
Is there any hope for Harley-Davidson?
Well, I think the problem with Harley is not necessarily the what people are worried about in terms of imports. It's the demographic. It's just an older group of people who ride Harleys. Now, I don't know. I don't ride motorcycles. My best friend, Michael Haley's got a Harley, and we go to the Harley store, and they look great. But then again, you know, I'm 54. Okay, maybe a little old. All right, there's enough here for everybody. There's enough to keep the averages hanging in. On Mad Money tonight, I don't want to be too glib, but it could be time to worry about earnings pain. I'm talking about big tech in Washington. And sit back, relax, and pop a cold one. I'm talking Uncle Sam, Boston Beer Company, that is. Stock's made a remarkable comeback. What's that all about? I'm going to get to the bottom of it. And I found a play that's staying strong despite multiple analyst downgrades. I'm checking in on the resilience of an old iron bender from Ohio. So stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.